Let's take a look at a few more examples. Let's move to the trading screen right away. And here you can see once again the same key level from the daily chart that we saw in the previous lesson. We traded, and I showed you how to trade this location right here, this false break. Now we are looking at the next one, this one right here, which is also quite a fantastic one. However, it did not work out just as nice as the ones that we talked about in the previous lesson. From this area right here, it took me an extra entry to actually enter and make some profit from this false break. Now here, as you can see, once again, we are looking at the 15-minute chart as our trading time frame. And here was our first, before we begin to actually take apart these two trades, you can see that this false break is also quite a small one. So here we see that we go above the level, and then we consolidate for a little bit, and then here is our first signal. So of course, once we've gone above the level, we set out our stop order for opening a short position. And as the price goes down, here is our first entry into falling. So automatically our short position is opening. And in this case, I used a fixed stop, which was around the size of the technical one. So I had no other place to attach it to. So the stop here was 20 points. And I wanted to take a 1, 2, 4. So I wanted to take 80 points here. And my take profit was around this location right here, since we can see that the ATR is quite powerful, and the range and the expectation and all of other things and all the rules told me that I can expect to have quite a nice ratio and can expect to take quite a lot of points. So here, as you can see, as it moves down, our trade is opened. However, it pulls back up and then closes. And the thing is, with these kinds of trades, when it actually pulls back up and closes above the level, some traders, and I do say that sometimes, you can actually just close the trade. However, there is a negative side to it as well. If you do close it, here, for example, it would open a trade again. So you would have to re-enter. It is quite subjective, and it's difficult to say for sure, even in terms of my own statistics, which is better to, if you see that your model for a false break is broken, then just close it. So if it pulls up and closes above the level, so should we just close it or should we give it a chance? In this precise example, I gave it a chance and it was a wrong decision. Remember that you can re-enter, but please use the 3 stops rule, so 3 negative trade rules. So if you traded 3 times and all of them were negative, just forget about it and probably not trade for the rest of the day, especially with money. Now here I've placed the stop order to the same exact location, to the same exact price level, and as the price moved down, it opened the trade. Because this candle here, as it happened, it moved down and then up, and that's where the stop was pulled. So it did not reopen the trade here, because the price was around this location when I still had the trade. Now, this example right here is of re-entering into the trade. And here we reopened the trade, and the price once again moves and closes above the level, which is really, really nasty, and I'm risking it again in this precise location. But as you can see here, then it finally gave the impulse that I was looking for. And you never know exactly where the impulse is gonna be. Sometimes you place your stop order right in the spot where the impulse is gonna happen, but it's not always the case, and sometimes you have to wait for it. Maybe sometimes you'll be stopped out and then you'll have to re-enter into a trade, and then you'll finally maybe see the impulse. So it's not 100% kind of thing that you can say that right here the impulse will be. You can expect it to be somewhere around the place where you identified the key point. However, it's not always that easy, and it's not always that nice. So here it took me 1 stop to re-enter and then actually be frustrated a little bit about this candle closing above yet again. But then it finally moves down, and I had the same kind of an expectation. I wanted to take the same 1-to-4 ratio, take 80 points, and my stop here once again was a fixed one, 20 points because I just had nowhere to attach it to. The technical one should have been here, which was twice as much. So that's why I used a fixed one once again. And here finally, after some powerful move down, some really nice impulse, and then a slight slowdown, but nothing too bad. And then another powerful impulse. And yes, you can see an example here that I've taken 80 points when the price actually moved another 100 and something points. So I could have taken 200 or more from this move. And if you look at the daily chart, then you can see that the price moved down hundreds and hundreds and hundreds of points. But that's, and I think that this is a great example for you. This is only purely psychological, and this effect can actually devastate your psychology a little bit, because it took you 2 tries and 2 stops, minus 40 points to get into the trade, and then the third one works and you make 80 points, and that's great. You've made just 40 points, but the market moved another 400 points. That is possible, but that is okay. Remember that we are looking for the initial impulse, but how deep it's gonna go, how many points it's gonna be, no one knows. So that's the core idea of trading the key levels. You can expect something, and you might actually have a really nice signal and a really powerful one, and it's not gonna work, and then a weaker one is gonna go 500 points. That does happen. Once again, trading is not something that you can predict for 100% every day. All you can do is find a really nice level, calculate a reasonable expectation, and to be honest, trading DAX, these kinds of indices and the futures, to be honest, expecting 500 points from the move, I've never had this kind. I've taken a few hundred points. I've taken, I think, 150 points, 220 points, but that was on a very rare occasion, and mostly my trades can be 30 points, 40 points, sometimes even 20 points if the stop was really small, and maybe 60 points, 100 points, but not more. Remember that taking a really powerful move can be quite difficult. And needless to say that here, as you can see, there was a really strong level here as well. If you use the trend break and a false break as a reason for a key level, there was a potential for a nice key level beginning starting from here. So this could have turned into a channel, and nobody could actually predict that the market is going to move another 400 points down. So please don't worry if you've taken just 80 points from 400 points. That will happen. That's okay. And please don't be frustrated about it. It's just part of this work, and be happy. If you've taken 80 points and you're trading with $5 per point or $10 or even $1, you will still be quite happy with the result. And your job is to make sure that you can repeat this kind of a trade every day. Don't worry about things like, well, the price didn't come to my take profit and then I was stopped out, as I will show you examples as well of my own trades like that in the past few weeks and months. And then the situations like these, when it took you quite a few tries to enter into a false break or any other kind of signal, and then the price finally moved and you've taken only 80 points instead of 400. This will happen, and that's okay. You don't have to worry about it. This is just the part of this work. If you have a profit, be happy. That's already a fantastic result, and you are already better than 97% of traders worldwide. If you're trading the hourly levels, you can actually expect to have quite a few trades per day, sometimes 5-10 trades. That's normal. But when you're trading the daily levels, daily key levels, then you might expect to take maybe 1 entry per day or 2 entries, 3 entries, but not too many, since these daily levels, they are actually quite far apart if you've marked them correctly. So in this example that I'll show you right now, these 2 trades happened on 2 separate days. However, they still were quite fantastic. So as you can see here, and this is my favorite example from the past market, from the past few months, and this is just a fantastic example of how to trade key levels from the daily chart and make 5 to 10 or 20 profitable trades from just one level. So as you can see here, and as you can remember, we've seen this example before. This is our CCL, the candle that has created the level, and this one here is the false break of this. And plus it is a maximum, and it is a paranormal candle, and many other reasons why this level is a really nice level. And as you can see here, this level, as you can remember, it was formed by the trend break, by the stop of the move, the trend break, then a paranormal candle, and also a false break, and then it turned into a limit player and a really nice consolidation with a bunch of false breaks and candles that confirmed the level, the CSLs, and a lot of support. And you will see a fantastic channel that you can just trade infinitely and make a lot of money while at it. So here we have the first example, the first place where we could have traded this level. And this is how it looks like in the 15-minute chart. And once again, really small one in the daily chart, but a slightly bigger complex false break in the 15-minute chart. And the idea is the same. As we go above the level, set out our stop order, and as the price moves down, the trade opens automatically, the short position. Now, the stop here is also fixed because the technical one would have been here, and it's too much. So the fixed one is going to be just enough, and it's going to be 20 points. And I wanted to, since I saw this one right here, and this level was also quite a strong one because of the paranormal candle and the body of it, and plus this confirmation right here. So I did not really have too big of an expectation, and I did not want to really risk too much and waiting too long. And that's just my expectation for that kind of a trade when I see this kind of a potential for a really small channel forming. So here I had a traditional expectation of 1, 2, 3. Since we have 20 points of fixed stop, then the take profit is just down here of 60 points. Then as we enter, we had one small frustration here, another false break actually. And then finally going down with a really nice impulse, and here we got quite lucky and our take profit was taken, after which we had quite a strong impulse of going up, and maybe some people who traded the false break from here were actually taking 1-to-3 ratio just like I was, and were leaving this trade, and that's what generated this impulse of going up. But then, of course, once again, the example of market moving even more points, it moves another around 100 points down. Once again, that's okay. I've taken 60 points and I'm super happy. Now, and here, the next opportunity presents itself. And here we enter again with a false break, but with this level right here in the daily chart. And that's where the blue arrow is pointing to, and this is the false break. And if you can see, it is a super tiny false break. It's almost invisible in the daily chart. However, it was there, and there it is. And you have to be very careful and have to be very patient and have to be actually very quick and very agile trader to be able to catch this kind of a trade. When it moves beyond the level, you have to be prepared with your order book or your buttons in your platform, like this one right here in the Pro Real Time, and be prepared to set out your stop order super fast. And if you can manage to get a trade like this, sometimes you'll still miss them. And as I've said before, I constantly miss a bunch of them because they are just so quick and so unexpected sometimes that the price might be coming to the level and then makes bloop. And that was your false break. It's just technically and physically impossible to enter. And then there is this impulse beginning with a really nice impulse of people actually taking a later worse prices, but which I really do not like to do. I really like to get the price that I want, the price that I see with the minimum risk. And if I don't, I just don't trade it, and that's it. And here, as you can see, this tail is super short, and I love the short tails, as I've said before. And here, my stop was 5 points. And since I had 5 points, I really decided to take a 1-to-10 ratio because it was more than reasonable. And this, as you can see here, this was the 1-to-10 ratio, 50 points profit. And here the trade closed automatically with a profit of 50 points. I could have taken 1 to 20, 100 points and even more. But once again, I wanted to take 50. Maybe when you'll be trading, you'll see that, okay, the expectation is a lot wider. So I'll take 1 to 20, I'll take 100 points. And that's absolutely fine. I'm just showing you what I did, and I was quite happy with the result. So I've taken 60 points going down here, then 50 points going up here. So I made 110 points just with key level trading without the indicators, which I'll be teaching you in the next lesson how to combine them and make even more profit. And that's pretty much it. So it is quite simple. And remember that trading these levels is extremely simple. It can be frustrating, yes, but in terms of complexity, they are quite simple. The most hardest part is to actually identify correct and strong key levels in your older time frames, such as the daily chart, hourly chart, and whatnot, whatever key levels you're trading. This is the hardest job of the key level trader. Actually trading them, as you can see, it's not that very difficult. All right, this lesson is coming to an end. In the next lesson, we'll take a look at a few more examples. For the time being, don't forget about the test and enjoy your homework, and I'll see you in the next lesson.